as we know, our focus is really on how this rapidly unfolding geopolitical event, this is unprecedented, how this is going to translate into a gold and a silver price reset. So with that in mind, let's add to what we observed in our last episode, where we looked at the real reason for President Xi's visit with Putin in Moscow and how this pivotal meeting cemented both a military and a financial alliance, which is really going to significantly accelerate the de-dollarization process. And given that gold is inversely but bullishly correlated to the dollar, how this is going to impact the all-important physical gold market, which is really what we focus on. And as we previously discussed, opting out of the hegemonic dollar-based system requires opting in to a sufficiently liquid alternative medium of exchange. Now, physical gold, once again, once it's actually delivered into the hands of the receiver, it's the only global currency that has zero counterparty risk, and it is infinitely fungible, which is another very important point we talked about with Dr. Stephen Lee last time. It has to be fungible sufficiently to provide a liquid solution to be able to opt out of the dollar and into a gold-backed solution. However, as physical gold, and you can read silver into this too, Shane, I know you want to, as they get readopted in an eminently fungible global settlement currency, it'll shake off its paper wrappers and be revalued at a much higher price that is presently baked into gold's dollar-denominated supply-demand price, which is what we're seeing here. And we're seeing a bit of a ramp today, but this is nothing to what we're going to see. And as we drew attention to the ability of the Sino-Russian alliance to access a potential aggregated 60,000 tons of physical gold reserves, it provides this unfactored, unpriced opt-in solution. And if anyone missed that episode 2 weeks ago, where we kind of dug into how that 60,000 tons may actually be available. Now let's first deal with the military side of this, as it is actually the driver that is accelerating the process. So not to forget, our focus here is on the impact these escalations will have on gold, and to also draw attention to just how underpriced physical gold and related silver is as this process rapidly unfolds. We're watching history in the making here, guys. People will look back at this. This is unprecedented. So with the multipolar land bridge now opened and aware that the actionable red lines are being approached, China is looking to step up de-dollarizing as quickly as possible. But to do so requires an alternative currency, which is what we're talking about. Hence, the first port of call for Xi was to, after he was re-elected, was to ramp up this process with Russia with a view to rapidly accelerate the implementation of an already designed multipolar-backed gold commodities-based currency, bypassing the US dollar, but liquid enough to service the EAEU, the Shanghai Cooperation Organization, the BRICS Plus alliances, for them to adopt the same gold-backed currency design. Now, obviously, it has to be one design to fit all. So this is the most interesting part of it.
Now, Andrew, we've been saying for years now that these are historic times, but the speed that this is all unfolding is quite amazing. How long do you expect this process to take?
Yeah, Shane, look, kind of looking at the velocity of this, this move out of the dollar following the Xi-Putin meetings, originally the BRICS Plus move to de-dollarize was projected. People were talking about it saying, oh, don't worry, it's going to take 5 years, 7 years to gain sufficient traction to really significantly impact the dollar trade. But following the Russia tokenizing physical gold on the peer-to-peer Stellar blockchain at the open of New Year trading, you remember we talked about this was mind-blowing. And following Xi's re-election and his fresh mandate to prepare his citizens for war, and we talked about that in our last episode, those are his statements. And so really out of necessity, these war measures see this timeline severely contracting. Now, our extremely well-connected liquidity providers from this side and that side confirm that the Sino-Russia alliance have sufficient aggregated physical gold reserves to ultimately tokenize the multi-billion-dollar energy and commodity sector, and assisted by a resulting significantly much higher physically settled supply and demand gold price. Now it's estimated that the timeline to de-dollarize and will significantly contract to a pivotal inflection point. Look, guys, in a matter of months, not years. And I know that sounds mind-blowing, but we've got some statements here to read out, which are in a little while, but which just really tell you that this is actually getting really serious. Now, with this in mind, late last week, unable to continue ignoring the elephant in the room, we evidenced several mainstream media reports waking up to the implications of a faster than estimated move out of the dollar into alternative multipolar commodity trade settling solutions. And now, while most of the mainstream media reports, it was probably best summed up in a Financial Times article, because it pretty much summed up what everyone else was saying, they're really trying to play down Putin's pledge to adopt the yuan renminbi for what Putin calls payments between Russia, Asia, Africa, and Latin America in a bid to displace the dollar. And they quote this in their articles. However, what's not factored into similarly constructed Bloomberg, Reuters reports is that the scope of this currency adoption is on a scale not yet realized by the mainstream analysts, who really try to psy-up and toe the line of the immediacy of this de-dollarization process. So, it's a bit like saying the banking system's broken. Well, they're not going to say it, are they? None of the analysts report, none of these reports factor in the fact that the renminbi, to be liquid enough to absorb an even larger percentage of global commodity and energy settlement flows, that the underlying yuan underpinning the offshore renminbi is going to be largely backed by physical gold. Not one of these reports even goes there, nor do they factor in that commodities increasingly priced upon a significantly higher dollar-denominated gold price will have massive inflationary implications for commodities priced and bought denominated in fast depreciating Western fiat currencies, dollar, pound, euro, you name it. Now, when considering this gold-backed currency will ultimately have to provide adequate liquidity to accommodate the lion's share of the 7,500 billion per annum global oil and gas markets, as well as in addition the 5,000 billion per annum commodity and energy sectors, then the scale of this potential gold adoption becomes absolutely clear. And that the gold benchmarked in dollars, that any gold right now benchmarked in dollars, will have to revalue at multiples of today's paper diluted dollar capped price. So looking at this scale of adoption, we looked at the potential, but the entirely realistic 60,000 ton pool of physical gold available to ultimately back such a gold-backed commodity currency. This is being ignored completely by any of the mainstream. While the massive bearish dollar pivot will not be escaping the attention of the extremely wrong-footed deep state hegemony ringmasters seeking to protect US dollar hegemony, the option of countering this attack on the dollar's reserve status by risking triggering an unthinkable nuclear war would just, again, that would blow back against them. So snookered, and they are, this likely leaves deep state very few options. So, this is a lot of stuff we talk about with the liquidity providers and well-connected people. Doubling down on the current in-play attempts to break the back of us 1.8 billion NATO members, these economies, well, they're trying to double down and break them faster, so that obviously you have to break it so they can continue to try and fulfill their World Economic Forum mandate to build back better. You hear them, Biden talking about it, hear everyone talking about it. This is something they cannot do once dollar hegemony is undermined. So they're scrambling. This is what we're seeing. We're seeing these strange laws and sort of moves, woke sort of moves coming in, and they defy logic. So there's a reason for this, because in order to build back better, you've got to break something.